Okay, so this video is trade camp number 4, and I had a request about creating a video explaining fair value gaps. Now, the way I wanted to organize this boot camp was certain concepts, leveled off of like basic, but like easier to harder, pretty much. So I was gonna do like break a structure, which is very simple, to liquidity, and then fair value gaps, order blocks. But since that guy that commented wanted the fair value gap video, I mean, we can get into it because it's fairly simple as well. But there's probably going to be multiple parts to this, and today I'm just going to speak on the formation of fair value gaps and how to find them. And then probably part 2 would be like, how would this, because certain fair value gaps have higher confluences, how to tell which ones will get retraced to or not. There's much more to fair value gaps than just the formation. So it's very important to understand that. Once you be It's all about how much time you really put into the market as well. When you put more time into the market, you're gonna see these certain movements to indicate, oh, maybe this one's not gonna get tapped back into again. And I feel like this one will. There's very specific reasons for why each fair value gap is the way it is, and how to read if this one's going to be high probability or not. Anyway, so let me just get into the candle formation of exactly what would be a fair value gap by definition. And this is the stuff ICT doesn't really explain. He explains fair value gaps and he explains how they're an imbalance in the market, but he doesn't explain how he deciphers which ones are high probability and which ones are low probability. Now, obviously, it comes with a lot of market experience, but there are some concepts to the fair value gap that you can learn just by teaching it word to mouth, but he doesn't really speak on it too much. And I'll get into that in future videos. But as of now, we're going to start basic. So this, as you can see, is a down. It's just candles going down. Now, you see from this wicks high to the wicks to this wicks low, there's no price action from here, right? There's no price action on this left side, and there's no price action on this right side. So you would mark that out in time as a bearish, right? So usually what ICT says is that this is an imbalance in price, and he calls it a BISI. And what a BISI stands for is buy side indeficiency, sell side. Oh, sorry. He calls it a SIBI. It's a sell side imbalance, pretty much. And what that means is that it's indeficient in buy side liquidity. So it's going to need to be retraced to with pretty much an up candle, right? It doesn't have to close above. It can tap into it and then go lower, right? Now there's so many, it's very, very meticulous on explaining fair value gaps. But what you need to know is that you have to know the formation of them 100%. Learning this, finding this in the market in time will help you get 10 times better entries. For example, right here, there's a reason why this one was respected. Now, people could look at this one and they're like, why wasn't this one respected? And this one was closed below. Sometimes it just taps in and then goes up. How come this one was closed below? And how come this one was tapped in and goes lower? Now there's 100% reasons to it, and this is what you can't get from ICT because he doesn't explain it, or when he does, it's hard to understand. And I finally figured it out is that there's see, I don't want to go too deep into it. I'm going to get into it. Anyway, let's just speak about fair value gaps, right? So, for example, remember what I said, wick, no wicks here, no wick over here. Not this is fine because it's at the high of this one, low of this wick. There's a little wick right there, right? And it doesn't have to be a wick, it could be bold as well. But you mark it out in time. And what does price do? It comes up, right? Comes up, taps into it and moves lower. That's a fair value gap, right? And you could there's so many more tools you use, equilibrium, etc. But we'll get into that, right? And I'll show you how to use this on lower time frames. So this, now you're probably looking at this like, oh, what is this fair value gap? This is a news, so don't even worry about that. And we're on the 4 hour right now. Now, I'm not going to get too deep into inversion fair value gaps because if you're new, you're just learning about fair value gaps. This is another fair value gap. There could be upside fair value gaps, downside fair value gaps, but some of them, the ones that are disrespected. So pretty much after you see this fair value gap closed above right here, in time, live time, you're not going to know if this is going to be closed above, right? Sometimes it just can wick it and then move lower. So you're not going to know in live time if this will be closed above. But if this candle closes above, for example, it closed above at 10 a.m., right? So if you're trading New York session, you know, once that 10 a.m. candle closes on the 4 hour above this, you're not looking to be short. For like, it's that simple. You're not looking to go short. Now, there's two reasons why this was inversed and why you can't tap this one, or why I wouldn't have taken a short off of this one while some people would take shorts off of this one. And it's because you had this high. First of all, this was the clearest. This was barely displaced above, right? So this high was barely tapped above. It did hit it and then move down. And I think this was a news candle as well. Additionally, we had breakage structure to the upside. We had this 4 hour fair value gap. So already we were playing inside fair value gaps. So we were playing inside. We were in bullish structure, obviously. You look at the trend, it's bullish. Now we get this little displacement. And what I see from this, because I'm a little bit more experienced now, is that this is chop. So I know what that means. This is an area of accumulation. And this, I know it's getting deep, I know, but I just have like a very jumpy brain, I'm going to be honest. This is accumulation, and this news candle was just manipulation. This was the manipulation it had to move down, buy it at a lower price, sweep out, stop out all the retail traders, and then to go up. So this is actually something ICT speaks about a lot, is his AMD. It's called accumulation, manipulation, distribution. As you can see, accumulation, accumulating, manipulates, distributes. Accumulates, and there's some form of manipulations. It could be on higher time frames, lower time frames, whatever. But you could see it every day. Accumulation. And this one right here. And it can even happen to the upside, happen to the downside. Accumulating, manipulation. It's like he also calls them Judas swings. He has multiple names for this, that, distribution. So you just saw one on the top and the bottom. Anyway, let's get back into fair value gaps. So all we're going to do today is mark out fair value gaps, right? Boom. You see this big candle? Fair value gap. Right here. Boom. You see this candle right here? There's no wick here. There's no wick here. No wick here. No wick here. You draw it out in time. What happens? It comes up. And you're probably asking, oh, but it hit all of this. Do not ever, and I'm saying ever, think that this wick or any wicks will ever invalidate a fair value gap. This could go as high as whatever, right? If it doesn't close above, all that invalidates the fair value gap, and make sure you're writing this down. All that invalidates a fair value gap is if the candle closes above or under it. For example, fair value gap right here, because if you look, there's no wick here, there's no wick here. You draw it out in time. Boom, fair value gap, right? Now, why would you be looking for longs off of this? Why? If this one's closed above, under, it's closed under, broke structure, right? So now we could use a break of structure. broke structure to the downside, closed under, and practically this would be called an inversion fair value gap. That's the correct term for it, where it would now that it's closed under, it would be supporting the opposite bias of that fair value gap. So this was a bullish fair value gap. Usually you'd want to see it tap in and then go higher, but now that it's inversed, you want to see it tap in and go lower, which it did, and it targets south side liquidity. But we're not going to get involved in that yet. This was the day I took an entry because I remember it was right after news. Anyway, so let's go into like 15 minutes, right? 15 minutes today was a good entry point. So this was 9:45, 9:30 market open. You see it come down. First off, it taps into this one and respects it because the wick goes up, breaks structure to the upside. So you know that what's the bias? You know the bias. You know it's bullish. It came down, swept out sell side liquidity. This one, this one, this one, and tapped into a fair value gap. Then it broke structure to the upside. Boom. Then what do you see? What do you see? What is this? A fair value gap. Draw it out in time. And what happens? You take a long here. You can put your stop right underneath the fair value gap's low. You target other buy side liquidity. And what does it do? It runs up today. Clear. And if you miss that entry and it starts moving away for you, find another fair value gap. Oh, what is that? Another entry. Boom, taps back in, runs. That's simple. Honestly, that's simple. I know it seems complex, but it's very simple. Let's find another session. All right, 9. I wouldn't have taken this one, even though it works out. I wouldn't take it one because it's 9:30 market open. It's just not clean. Anyway, break structure, right? This is what we talk about. Break structure here, and this can be considered a break of structure. Either one. Anyway, break structure comes up, right? So this is where I probably would have entered anyway, because it pushes down so low. And if you probably look on a higher time frame, exactly. If you look in a higher time frame, there's still these relatively equal lows on the 4-hour. So I'm not gonna get too deep into this because there's also more liquidity that I don't want to talk about yet. Okay, so these were relatively equal. Anyway, 1 hour, I'm sure there was some. Okay, perfect. Look at this, a fair value gap. Wow, would you look at that? And look at that, taps in, goes up right off it. Anyway, so let's get back into the 15-minute. And this is how you would take an entry just off the 15-minute. There's 1,000 other confluences you could probably find. Fair value gap. And look, this is where you would have shorted to. Taps into the fair value gap. You're entering. You could put it above the candle. Close. Or, I mean, open. I wouldn't like this wick because it's too extended. And then you could do TP1 right here. TP2. And eventually, I'd say TP3 for the bottom of that fair value gap, which it does hit. And that's a 1 to 4. That's like a straight up genius trade. Anyway, let's continue. Let's see. 9:30 market open here. And you don't particularly have to find, market open. I'm just saying as if we were in a real session. Right? So this is 15 minutes. So each candle is actually a very good move to catch. Anyway, so as you can see, chop, 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 accumulating, distributes down, comes up a little bit, distributes down, creates these imbalances. It was probably a singular on the 1 hour as well. If you're looking at 1 hour, is this singular fair value gap, right? What does it do? Comes into it, taps it, doesn't close above it, sinks lower down to the sell side liquidity until it hits this sell side liquidity. And I just showed you how we found it. What does it do? You wouldn't be looking for any more shorts off of these because now liquidity has been hit on the sell side. If there was like more, I wouldn't have looked because this seemed like the most, right? So this was like a news bluff. This seemed like where the liquidity was residing, really. This was a news bluff purely. Anyway, so now you see on the 1 hour, what do you see? Boom. It breaks structure to the upside. Right after that, no more shorts. No more going short. Now it swept sell side. It broke structure to the upside. Now let's find only longs. Let's look for long setups. Anyway, it broke structure on the 15-minute here. Oh, what's this? Break a structure, liquidity sweep, fair value gap. Wick down, come in here. Hello. Tap in. Underneath this low, you target now the buy side liquidity. Look at this, equal highs, perfect. Look at this, unprotected highs right here. And you just keep going and you keep going until it breaks structure to the downside. And look, this would have been, you could have honestly, went up to these highs or these highs, 1 to 3 on a 15-minute chart. You know how insane that is? Could have went up to this high right here. Insane move. Anyway, now we're kind of talking about putting the whole strategy together. I just get too ahead of myself. I'm sorry. If you have any questions about fair value gaps in general, let me know in the comments, please, because I respond to every single one. I actually, it's like a passion. It's not specific. I don't care. I'm not doing this for any money. I don't care. I just really like what I really enjoy this stuff. So please comment down below. Let me know. Have a good night.